Yo, what's up, guys? Welcome back to another week of fundamental analysis. Um, November Q4, I'll be trading until maybe first or second week of December. I did take a loss this week, and I'll show you the trade. That was for gold. Um, but yeah, let's just run through it. So let's go through the loss on gold. Bring up my diary here, where basically we did take a smaller position, quarter of my risk, my 1% risk. So we did lose around $75. And the reason why I did decided to take a quarter lot size was fundamentally and technically wasn't the best setup. Was still valid, but basically you can see from a daily chart we do have that impulse. We have a nice break here and retest of this 4 hour high, or what some may call resistance. Took a quarter percent risk, popped it all the way even below this support. The reason why I did this was, yes, I could have made it small at this resistance here, but I figured widen up stop loss, have the risk low, have the feeling that I am in a trade, and if it does come closer to this support area here, we could potentially get a better entry, maybe half a percent, but you can see it tanked down, so got out that trade, small loss. It is what it is, right? So not a big deal. We're still up for the year. You guys remember October was a pretty bad month where we were down 4R. So we'll track on. Let's just go through the actual fundamental analysis. So this is the 4th of November to the 10th of November. Just a reminder, guys, this is not financial advice. Please, seek a financial advisor to properly learn how to invest your money. These are just my thoughts of the market, and this is my trading sort of journal tracking things. So CFT report, we on the 5th of November, we had some pretty big swings. This was election week. We have bearish into the pound and yen. We have bullish into euro. We had the indices that were very bullish, and that's something I want to talk about. We have oil bullish as well. So the indices are that's my main focus right now for past the election week. From a fundamentals point of view, we had rates at the same 4.75. We had ISM services PMI again being consecutively hotter than expected by quite a big margin. So services always doing strong. Manufacturing has been the weak point of US. Aussie, we had cash rate just remained the same, not really too much to comment about. So election, biggest thing we saw this week was that Trump won the US election, and the main sort of things that, mind you, I'm not an expert in this, but just hearing what people the general public is talking about regarding Trump, he's always he was speaking about lowering tax for the citizens and increasing tariffs. So tariffs, obviously foreign sort of tax on top of things, just to use services and goods in the US. So basically, what I read that as is, and then just a side note, we also saw risk markets such as Bitcoin and indices trade higher, whilst commodities such as gold and silver trade lower. Markets were focused on the pro-growth policies rather than the risk of tariffs or increasing deficits. So this is my personal opinion. I think tariffs limiting trade is long-term effect would be bad for the economy, the US economy, because look, at the end of the day, they still use China and other areas for trade, for manufacturing, for labor. So I think it is going to affect relationships, and in the long term could potentially be bearish for the dollar. But in the short term, definitely bullish, especially you can see indices just skyrocket after hearing about Trump winning. So that's what I gained out of the election. We had ISM Services highest rating since July 2022. It's been trending up. Services, at least PMI has been great, really, really good. Always hotter than expected. So, yeah, nothing too much to comment on that. FOMC, this was a quote: the committee judges that the risks to achieving its employment and inflation goals are roughly in balance. So no extreme changes, sort of really just sitting on the fence with everything. So I think if we do get a big rate cut, or if we do get a big potentially rate hike, which is very unlikely, but it's going to be really shaking the markets, because right now we're just hovering, at least regarding the rates. University of Michigan consumer sentiment, it was better than expected. Consumer confidence readings are doing good. So what I mean by that is, I think last week or the week before that, we had consumer confidence, which was hotter than expected. We have University of Michigan consumer sentiment being hotter than expected and revised up. We have services doing good, manufacturing doing not as good, but you can see in terms of a sentiment wise, people are quite bullish, especially after Trump winning. So you guys will see later on why that's changing my gold position and what I'm going to do about it. So this is meant to be AUD. This was in regards to the cash rates. Aggregate demand remains above the economy's supply capacity, evidenced by persistent inflation, surveys of business conditions, and ongoing strength in the labour market. Target of 2026 for inflation to be down at the goal of 2% or 2.5%. So that's just something I wanted to note. Maybe I might change this to odd cash rate. Save that. So nothing too much to see. Feds, you can see it's coming down. 25 basis point cut, not a big 50, which is just minor relative to the slowing or the controlled inflation, the declining inflation at least. Nothing too much to talk about for those. Next week's data, we have wage price index for Aussie, we have CPI, PPI for USD, we have parallel, so some good news. Maybe even retail sales, again confirming sentiment's good and the economy doing brighter than expected. So bias wise, you could see last week we said poor jobs data, potential long against, and then I did state careful as sentiment does show signs of a healthy outlook on the economy. That is something I did note. The election confirmed that strong consumer sentiment bears to trade indices. So look, from a fundamentals point of view, interest rates coming down, poor jobs data at least from the US economy, I could potentially trade gold long. It's a possibility, but this US 30 and indices just look like a better opportunity. Although we have poor jobs data, we did sort of say the hurricane may have an effect on that, but also just the election and strong consumer sentiment and strong services. It's just a more ideal candidate to trade long right now for me. So Aussie, we're still staying out of that. So if we go on the charts, let's go on the charts. We got dollar going up. You guys can see dollar going up, dollar index going up. Keep tracking that. Gold, we'll take the flag off. Pop this as a loss. Pop that as a loss. Let me just delete this one. Okay, pop that as a loss. Hide that. You can see if I want to mark gold up, potential support here on the daily. But again, like I said, not really too concerned with gold right now, because from a fundamentals point of view, if we go on this guy, US 30 is doing much better. So these are the certain areas I've marked for US30. We've got a break. We could retest here, we could retest here, or retest here, or anywhere there, to be honest. If we put our fibs up as here as the highest point, you guys can see probably here is where I would like to get an entry in the most, in between 50 and 75. Yeah, I don't think I would take an entry here, to be honest. So we can pop in an alert here. You know what? We'll pop an alert here as well. So if I do see price, where are we here? Come down, tap here, really show a nice engulfing on 4 hour. I might get in there, or if price just even taps here, shows a little bit of signs of bouncing off, we can go there. If we get stopped out if this crashes here, could get there, or if it crashes here, we get stopped out here, comes down here, we can maybe go again. So those are some options. I'm just overall bullish on US30, and will be until otherwise. Aussie, like I said, not really too much to comment on this. It's literally, if we go on the 4 hour, choppy, so no trades. That's the week done, guys. We've got a couple more weeks left of this year. Overall, I will be, depending on how November and December goes, but it looks like I will be profitable this year. Not by much. I think we've made 7R, 8R, so nothing crazy, but stay tuned. Let's finish the year strong.